In this video, traders, we're going to look at the dark cloud cover pattern. Stay tuned. Hey guys, warm welcome to you. Alright, so what is a dark cloud cover pattern? Let's find out. It's really a candlestick pattern that's bearish. It's a suggestion of a change in sentiment. It's something that potentially, if you see, you're either going to want to hit on the short side or you're going to want to skim off some of your long position. Now, is it as aggressive as some of the other patterns out there? It's perhaps a bearish engulfing, one of those. No, but nevertheless, it's something to be aware of. Now, it's called dark cloud cover pattern because sometimes people are coloring their up candlesticks, if you like, in white and the others are in black. We're using green and red as I would do in my charts and as you may do in your charts. So maybe it's the red cloud cover pattern, but you get the point. So before I continue, guys, I want to thank you if you are a subscriber to the channel. Your support is appreciated, as are all your comments, questions, likes, dislikes. Any of your engagement is appreciated, so thank you for that. Let's get back onto the video. So, dark cloud cover pattern. You can imagine the price has been chugging up nicely, all the buyers are in control, lots more demand than there is supply, everybody's happy, buyers are anyway, and then we get a standard, and in fact, this is where we, if we're looking at a sort of price action perspective almost, let's have a look at the intraday chart, how that looks, because, that's key as well. So we've had a nice chugging up day, and there's our day one. I'll just put a dot here and I'll mark that as day one. That would be that candle there. Let's put it as one and let's name the number two so we know where we are. Number three, so we get a nice up day, great. Next day we gap up, don't we, because the open of the red candle is higher, so we've gapped up. We've actually gapped up, actually, to be fair, if we were doing it technically correct, which we should do, it's a bit like this, isn't it? Because there's a slight wick there, so there's a little bit of a high. But hey, splitting hairs, you get the idea. Now on day two, we gap up above the high. So everyone's happy, there's our open, and maybe we do a little bit of work to the upside. That's our wick there. However, things start to change, and this is where the juice of the trade comes in. Sentiment starts to shift, and we start to not only fill that gap there, and I haven't quite drawn it in line, but you get the point. We've filled that gap there, but we've now started to encroach right down into the trade of the prior day, and that's pretty much what we would be looking like on an intraday basis. Yeah, so it's in our intraday chart, so you can imagine how disappointed, it might even be a little bit lower actually, but you can imagine how disappointed the bulls are with this kind of thing. They get the gap up, but an intraday change in sentiment comes along and just turns things round. So now we get to push down, and then number three is the confirmation. So maybe there's a little gap up, in this case there is. We do a little bit of work to the upside, and then what do? We take out the lows, and we are kind of here. So you've really upset the bulls quite dramatically, and if you can imagine, if this was an uptrend beforehand, depending on obviously price position, all those other kind of things that we like to take into consideration, you get to a point here where intraday change in sentiment has been quite substantial, not seriously enough like a bearish engulfing like I mentioned earlier, where you're taking out completely the range, but still significant enough that it's gapped up, rejected, drifted lower, closed in the lower third. I think those are the kind of rules that you've got to have. You can be a bit flexible with it, but a gap up definitely, then comes back down and closes in the lower half, probably if you're being less aggressive. You're being super aggressive and you want it. The very best trades, you're going to want it in the lower third perhaps, or at least have tested there, perhaps not the close, but at least have tested there. And the next day, you're not doing anything on day two, by the way, you're now waiting until day three. Day three is the confirmation, because don't forget, that's not much on its own. You need to see a little bit more kind of oomph from the supply coming in. Day three kind of confirms that buyers are a little bit wary, and then there's your short opportunity. So you're either going to hit it at the close of day three, which is probably the textbook way of doing it. There's your short, and perhaps you'd use it with the stop above the high there, so you can get a little bit better risk reward ratio. The earlier you take it, the problem that we always have with traders, guys, is the earlier you take it, theoretically the wider your stop's got to be. If you start taking it at the end of the close of day two, one, it's not really that bearish, it's that confirmation that really adds to the weight. And don't forget, you're probably still an uptrend here anyway to have received that. But the important point is that if you start taking it there, you have to have a stop up there. The risk reward ratio gets all skewed and gets all horrible. Rather as often is the case with these things, guys, wait a little bit, not just for the confirmation aspect, but which can be take it or leave it sometimes, but for the aspect of, okay, well, I've now got a new line in the sand that I can use to manage my risk off, i.e. that's going to be my stop loss. I can short wherever I want. If we start to go above that high there, I probably don't want it. It's not quite as an aggressive supply and demand imbalance shift as I expected, or as I suspected, should I say. So anyway, guys, that is the dark cloud cover pattern. Useful. We're going to say this is going to be not an intraday chart, a daily candlestick chart, because you're looking at the intraday, what's happened within each of those candles, to understand the pure price action behind it. Dark cloud cover pattern, guys. Comments in the comment section below, always appreciated. Take care, see you in the next one. Goodbye.